Wall Street opened with minor gains. The positive market sentiment is dampened by the resurgence of new coronavirus cases in the US. Even though infection rates are slowing down, investors are still worried of a high daily increase. The US dollar index is extending weakness amid expectations of a new stimulus package. Market participants seem to anticipate that the U.S. authorities will give away lavish financial aid to the population before the presidential elections with a view to easing social discontent. This is another factor behind the U.S. dollar's weakness, leading American banks downgrade long-term forecasts for the U.S. currency. The greenback looks too much oversold in the medium term. Today, its index is still following the downtrend. Market participants are poised to sell the dollar. On Monday, sellers broke the level of 94 points. The index opened the New York trade at near 93.80. At the same time, the U.S. stock market is developing a steady rally. The Dow Jones is striving to breach 26,500 upwards. In the early New York trade, futures on the Dow Jones rose 0.25% to trade at 26,300. Futures on the S&P 500 gained 0.38% to trade at 3,215.88. The indicator is testing June's highs with prospects for a further climb. If the rally is extended, the index will be able to close the gap from 3,328. Today, the market is cautious about risky assets, so analysts do not rule out a downward correction from 3,140. Anyway, the S&P is expected to hold at the level of 3,200. This week, investors are focused on the U.S. GDP and policy meeting of the Federal Reserve. The policymakers are unlikely to make updates, but they could shed light on further moves in September or later this year. Any hint about negative interest rates will deal a blow to the weak U.S. dollar. The greenback is expected to decline ahead of the policy meeting and in the wake of it. The Canadian dollar is taking advantage of the weakness of its American peer. The pair is trading lower. Today it settled down at 1.3400. Oddly enough, oil prices have not responded yet to the bear trend of the US dollar. Both benchmark oil grades retreated from the highs of the last week and are trading in the red. The reason is a robust drilling in the US. Market sentiment turned sour amid escalating jitters between the US and China, which is another culprit of the US dollar's bearish trend. Looking back, the US currency used to benefit from tensions between two powerful rivals. Nowadays, everything is different. Traders opt to buy the yen and the franc as safe haven assets. And that's all for today. Thank you for watching and see you back tomorrow. Bye.